Have you been considering trading with a prop firm? Has it been in your mind that maybe it's a good idea to actually trade with a prop firm because maybe you don't have the finances to go and trade your own money on the stock market? And it's so attractive with their offers of maybe you can trade with $15,000, $50,000 or $100,000 of their money. And I'm going to talk to you today about whether prop firms are a good idea or whether they're just a scam that's not great for anyone. And while we're on it, we'll go to the charts as well. We'll have a look at the charts, which will and I'll show you today on those charts how you can become a profitable trader or a break-even trader, at least, instead of a losing trader. Not to mention the fact that we will also show you the system that I use on a daily basis that I've used for the last 30 years, and it's worked for me, and it'll probably work for you. It might help you either become a profitable trader, or it might help you win that prop challenge that you want to take on. I've actually been thinking that maybe later on we'll take a live challenge together. We'll do something online, but I still have to figure out the live thing before we get there, so we'll do that later. It might be fun. It might be something that we can all do together. Pick a prop firm challenge and we'll go for it. I see there's a few competitions out there that maybe we could enter or something like that. But let's get to the red flags of prop firms, and before we get to the charts and I'll show you the systems, let's talk about why prop firms are actually a bit of a scam sometimes, and why there's a lot of red flags out there as far as prop firms go, because they're trying to entice people into paying for a challenge and then getting them into the prop firm challenge scenario, and then they tell them they're going to get so much money to trade with. Now, the first red flag for this, guys, is you might be a beginner and they're now offering you a chance to trade with huge sums of money. Now, that in itself doesn't make a lot of sense, and they've obviously protected themselves immensely from failure, from people doing really badly. But what they're actually doing at the end of the day is making a lot of money from the challenges. The first red flag is that you've actually got to pay to trade. You've actually got to pay to get this funding. You've actually got to pay to get into the system. Then the idea behind it is that they collect all this money from all the young people paying, and then they give them a demo account. They don't give them a real account. So how are they paying people out of those demo accounts? Because they're not trading with real money, it seems. So it looks like most of the profits are actually made from the amounts of money that you put up for these prop firm challenges. Now you'd think, well, how does that work? Well, the whole thing is this. If you fail the challenge, you've got to pay again. So you fail the challenge, they charge you for another challenge, and you take another challenge. And I've seen quite a few traders out there taking 6, 7, 8, 9, 10 challenges, failing them all because they make it really difficult for you to get through these challenges. And one of the big difficulties is you have to trade on their conditions. So if you're used to trading a certain way and they tell you, no, you need to trade this way, and then what they do is they put what they call drawdown amounts. So you're only allowed to lose, say, 4%, 5% on any given day or overall. And if you lose that amount, they'll actually take your account away from you. They'll actually close your account. So in other words, you'll fail the challenge. All right, that's great. You failed the challenge, take another challenge. But if you pass the challenge and then you get the account, let's say you get a fantastic $50,000 or $100,000 account, and you're on the road and you think, well, I'm on the road to make a profit here. And the first thing that happens is you get a drawdown. When you get that drawdown, when you fail that drawdown, they literally take your account away from you. And then you've got to do another challenge to get back into the prop firm thing. So how does that work, guys? How does that actually work out? Another big red flag, guys, I've seen out there is a lot of these prop firms are actually not paying out. So they're not paying out to their clients. The money is not going out to you. So if you're not getting paid out, that is a massive, massive red flag. Recently, there's been a few prop firms that have gone down. And a big red flag for me is that the governments and the Fed and all the rest of them are investigating prop firms. And they're looking into these guys as whether they're a Ponzi scheme, scams, or whatever the case. So that for me is also a little bit concerning, because once the government starts looking at these people, you have to ask yourself, what the hell is going on? The other thing I found out from speaking to a lot of prop firm traders is there's a huge percentage, like over 90% of them, that are not successful, that are not passing the prop firm challenges, and when they do, they're getting kicked out of them, or they're not getting paid out, or they're not making money. There's a very, very very small percentage of actual traders that are actually making some money out of these prop firms. So that is also a really big red flag for me. So my research has told me, you know, with these guys not paying out and with a lot of them closing down and a lot of these things happening, it's actually probably easier to make money with your own money, even if you don't have a lot of money, because at least you know how much you've got, at least it's in your account, and when you make a profit, the profit is there for you to take it. I myself am a little bit concerned that there's too many red flags surrounding prop firms, and I'm just a little bit concerned that these prop firms are scamming the hell out of people, because for me the biggest red flag is when you have to pay to get a job, and that doesn't make sense to me in any sense of the word. If these guys were actually looking for good traders to trade people's money, they wouldn't need to charge them. They would just need to go through the process and they see, no, this guy can trade, he knows how to make money, he's a successful trader, have a competition, whatever the case, get the people in. Then you've got the best traders. These guys are effectively working for your trading firm and they're making money for your clients, and you're paying a commission to them based on their success rate. Why are you charging people to enter a challenge? What is that all about? The only reason you can be charging people to enter a challenge is so that you can make some form of nasty profit. Now guys, don't forget that all trading is risky. All kinds of day trading, swing trading is risky. And at the end of the day, 80% of traders do lose money, because trading is effectively a 50-50 game. How many times I've told you guys that 50% of the time when you take a trade, it could be successful, and 50% of the time when you take a trade, it could lose. I don't care what system you're using. I don't care what system you think is the stars aligned on the right and the left and made it such a great system, and it's made from I don't know what. It's all the same, guys. Whether you've got this system or the next system, the simple one or the complicated one, it's still going to be 50-50. So just keep that in mind. If you don't like risk and you don't like losing money, rather stay away from trading altogether. That said, you know, if you get into a prop firm challenge and you get into a prop firm, you're probably thinking, but it's not my money, so it's probably easy. Actually, guys, if you're doing this, it's your money at the end of the day, because you're paying for the challenges. Not only that, you're looking to make a profit off of those trades. So just bear that in mind. It probably feels easier, but it's not that easy. Big thing is, guys, there's not many guys that are actually making a profit and actually getting paid out by these guys. Don't forget, pop down to the description or the blog and get your free Forex book. Totally free. It's on me. Enjoy it. It's a PDF. Read it. Have fun. And don't forget, I've got trade of the day every single day on the blog, but that's just the one trade. If you're interested in more and a video and that sort of thing every day, then you'll have to join as a member, because, you know, it is work out of my time. So that's what it's all about. But without further ado, guys, let's go and have a look at the charts, and let's go and have a look at the system that keeps me profitable, and it'll probably make you profitable as well. And it's as simple as you can possibly find ever. Right, here's the system that'll probably make you a profitable trader and probably help you pass that so-called prop firm challenge that you might be interested in. But as I said, guys, I'm a little bit concerned about prop firm challenges as we stand at the moment, and they might just be a little bit tricky. So let's have a look at what we've got here. This is a euro US dollar. That's fine. It doesn't matter. Just remember, by the time you see this chart, while it's live for me here right now, it's probably expired by the time you watch this video, because I've done this in the past. But I'm just trying to show you how to trade. That's what it's about. I'm trying to show you how to trade in Forex or the stock market or anything else, because it's all the same. First thing we do, obviously, we go to the higher time frame. In this case, it's the day chart. We have a look at the higher time frame, because the higher time frame gives us a picture of what's going on with this particular product. Then I look at the line chart, because the line chart gives me the closing prices, which is pretty important. Now, and then I look at the resistance and the support that we've got here. On the resistance front, we've got a resistance right about here. Now, this resistance is quite an interesting one, because earlier on I had a look, and at the previous resistance it had broken out, and in this event it's sitting inside that resistance. So that is quite important. Let's draw the support, and we've got quite a support level sitting down here. Now what that is, guys, that's the amount of times that this will come down and hit a certain area, that's your support, the amount of times it'll go up and hit a certain area, that's your resistance. And it doesn't go past that quite so simply. Take it back to the candles, because we do use the candles to determine whether we're going to take a trade or not. It's quite simple. What you do is you wait for a confirmed green bar to take a long out of the support, and you wait for a confirmed red bar to take a short out of the resistance. Now I'm going to go back to the lower time frame, in this case the 4 hour. We could go to the 1 hour as well. That is also fine. Just this time I'm just looking at the 4 hour chart. Now here we go, guys. You see now on the 4 hour chart, that's what I was looking at. What you've got here is it broke through the resistance and gave a break. Now what a lot of guys would have done on this break is said, oh, that's a break, let's go long. But generally when it breaks, I'll normally just wait a bar or two and see if it retests. And if it retests, then wait for a confirmed green bar coming out of that and then go long from there. Because sometimes these guys push through, break, and then come back all the way back through, and this remains a resistance. At the moment, it has broken through, turning it into a support. So what you're waiting for on this particular trade is, are we going to go long or are we going to go short? And that's the basis of the whole trade. Now, you're thinking, what are you saying, Rob? You're like, are we going long or are we going short? Now you've just confused the hell out of me. No, I'm not trying to do that. What I'm saying is this trade could go either way. We do have a break and the bias is towards the long side. We've had a nice long upward swing here. It's broken through and the bias is to the long side. But the only time that you can take this long is when you have a nice confirmed green candle that closes, not halfway, that closes over here. Then you can say, we've got a long trade and it's going to carry on long. And we can take a long up to the 110 levels somewhere at the top here. If it goes back through this resistance, or what is now support, and it breaks back through, when it breaks back through, that is it, guys. That is generally, this guy's not going up, it's going down. Look for a closed red candle and just go short. It's going to go all the way back down to the last support. And that's all you got to do. Don't trade within this area. Wait until it breaks out either side. When it breaks out either side, you've got a good trade. Now, why I say is when it breaks through this side and it comes out with that great green bar, why didn't I go long? Because I would go short on this side. And my main reasoning for that is that's the first break. It's hit this resistance a number of times in the past. There. Look at this. 1, 2, 3, 4, 5, 6. 7, 8. It just keeps hitting this resistance and then going back down. Now it hits this resistance, breaks through the resistance and goes up, forms a pincer top. Now if you look at candles, guys, and you've looked at those charts that I've given you in the previous videos, you'll see what a pincer top is. A pincer top means it could go down. Now that's why when something breaks out for the first time after a number of hits on the support or resistance, I'll rather wait a candle and just see if you get something like this, because a pincer top is dangerous. Then I'll wait and see if it retests. Now I don't like too many rules, as you know. I like to keep it simple. But on a break like this, I'm very, very cautious. So you wait for that retest. If you get the green candle coming back off the retest and it closes, then you most likely have a good chance of a good long. But if it breaks back through this, you've got a really good short. That's as simple as break and retest goes, and also, breaking a support or resistance level and trading into it. This will help you become profitable. Don't forget to watch your trends, guys. Watch which way the trend's going. Follow the trend. This one was actually bearish. It broke the bullish trend and then it went bullish and it broke the bearish trend. How does it break the trend? It breaks through that level, the last. You see the market structure? You see where the market structure is? If it breaks through the market structure, then it's broken the trend. This side as well, you see there was the market structure. It broke through the market structure, breaking the trend. So when it breaks the market structure, the trend is in that particular direction, and in this case, bullish. So keep that in mind when you're trading on the charts. So now you've seen the charts, you've seen the simple system, and I'm sure that system works for you as well as it works for me. Keep it simple, keep it easy. Don't get complicated, don't go nuts, and just manage your risk. It's so important to manage your risk with the things that have gone on in recent times with the markets going very volatile. If you didn't manage your risk, you would have been in a lot of trouble in your accounts right now had you been on the wrong side of the market. If you were on the right side of the market, really great. As I mentioned to my members last week, really important thing that I have haven't told you guys, and this is a little trick from my side, and if you can trade the volatility index with your broker. Now I have a broker that I can trade the volatility index with. What I do is when the index is at its lows, now my volatility index, some of them are different. Its lows are around the 15, 14 mark, and its highs are around the 30 to 35 mark. What I do is when it reaches the 15 mark, I buy, and if it goes a bit lower, I buy more. I'm totally against policy, but it's the volatility index. It stays in that level forever, and then I just leave it and I totally forget about it. Volatility will hit, there'll be a correction, and when the volatility hits, it goes through the 20s and usually hits the 30. When it hits the 30, I sell everything, make a profit, and start taking my shorts. I start slow taking my shorts, slowly adding to the shorts and making it bigger and bigger and bigger. Guys, to give you an idea, just yesterday I made $30,000 on that. That's a huge sum of money, and it was just lying there, and most of the time it was lying there. Do you know what? It was in loss, just lying there in a loss. I didn't touch it. My stop loss is way down at the 10. If it goes through the 10, then the world's ended. So yeah, okay, then you lose. It never happens though. It always stays above that, and it sits there in a loss, and you look at it and think, when's this ever going to happen? And then it happens, and when it happens big time on the volatility index. So if you've got one, just a hint, it's not trading advice, remember, it's just what I do, and it's just an idea, but it works for me, and it's a great bonus to have once in a while. It just pops up into your pocket just like that. It's great, and it makes you feel good. It really does. It makes your emotion feel better, and it makes you feel better inside when you make a tidy profit like that for doing very little. So if your broker does offer that, grab it, take it with both hands, because the volatility index, you'll see it just stays in that range, and I mean it can't go anywhere effectively. So if you just buy in at the bottom and sell out at the top and go short at the top, you're bound to make some form of profit. It's an amazing product. So guys, I'd like to say thanks for watching, and in the next video I'm actually going to show you an indicator that forecasts the future. Well, okay, there is an indicator like that. We don't use it, and we're never going to use it, but we're going to have a look at, does it work? Is it great? You know, but it's only on these charts, and we'll see. But I'm just going to have a look at it, and I'm just going to show you what it is. You might want to use it. You might want to try it out. You might want to backtest it and have a bit of fun with it. Like I've always told you, don't confuse yourself with all the indicators. But we're definitely going to go and have a look at this indicator, because it's quite an amazing thing. It literally predicts what's coming next, and I want to see what that looks like just for fun. But okay, guys, that's next video. That's on Wednesday. Guys, have a great trading week. Don't forget to watch the last videos. Cheers, thanks, and bye.